Hello everyone and welcome to the weekly review. So essentially this video is just to describe the areas that we could have got in using our analysis. So and this is matching our weekly analysis videos as well. So yeah, so let's begin with GBP USD. So at the very start of the week, we saw that pullback into our yellow reversal zone. So if you want to check that video, we were stating that we want to see some sort of pullback into this area with a rejection and that bullish momentum to the upside. So if you actually have a look here in the very first day of that trading week, we had this very big rejection candle of this reversal zone in yellow and in confluence with our weekly level at 1.2967. So remember guys, it's all about confluences and marrying up these different types of strategies together. So as our strategy enforces demand zones and playing off these zones, essentially we have to pick the right signal. So that's stage one, and stage two is looking for the momentum. So we found the momentum change, and that was this candle here. So if you did take this buy and place your stop loss below this level, you would have been looking at around 150 pips profit. It just depends now on your exit strategy. You could have taken from the low, from the new high. It's totally your call. But we was anticipating this to continuate to at least touch our daily level, which did not occur. So to a degree, if you did hold on to it, or if you noticed that it was descending downwards, especially after on Friday we had that huge news move early in the morning, then it's totally your call how you want to exit that one. Regards to Euro USD, we got a little bit caught out here. So we was anticipating push to the either upside or downside. Now, if you did take this trade to the upside, you would have got caught out. That's what I'm saying. It's not 100% strategy. It's not a 100% win rate. That's just what trading is really. There's no 100% win rate in any method at all. Now, in terms of the move to the downside, there was an opportunity here, but you got stopped out by the news again. Now, if you did take this as a move to the downside, this risk profile was a huge move if it was to come back against you. So if you didn't take that, it's totally understandable. So you're risking about 60 pips. But for future references, if you are if you do have a big enough account and you're risking 1%, you can work out how much your 1% is if you change your lot size. So essentially, it's your 1% divided by your pip size, and this would give you your lot size figure. And then this will now be a 1% risk as opposed to, let's just say, a 6% risk depending on your trading size and your account size. But yeah, if you did take that trade, this move to the downside would have been 30 pips. But if not, there's there was no other real work opportunity otherwise than that move at the end of the week. USDJPY again, early start. An early move in the week, and it held to the downside for the majority of the rest of the days. So on the 20th of Jan, so on the Monday early morning, we experienced this huge push to the downside. So we've already had a lot of rejection. Now, what we see here is a lot of indecision in this area, and that can classify as a move, as a pullback move. Because look, we had that push to the downside last week, and then we had that pullback inside this candle here. Now there is indecision that does potentially class as a form of rejection in sort of degree, because in order for this short to be invalid, it has to close above this zone. Now, because it didn't obviously close above this zone, we are anticipating a short. So all we had to do was just wait perfectly for the correct time for a bearish candle to present itself, and as it did find, we had that a little bit of a pullback if you wanted to test these levels, but essentially a short was in play here, so risking about 28 pips, and it essentially descended all the way down for around its peak is 80 pips. Now, if you did miss this opportunity there was an opportunity on the end of the on the Friday, as we had that pullback into this zone here, followed by a bearish candle, and that had an opportunity to add to position of 38 pips. So quite a good play for US dollar, Japanese yen. And finally with gold, we had a lot of pullbacks into this area, if you've noticed, quite well here. Now, some people may have got caught out here as we had that pull to the downside, thinking that because we had a rejection here that this would continue it to the downside. Now, we have to be careful here because we have to make sure that the candle is within the zone and it's fully rejecting this. So an example of a candle rejecting this zone is some candle like this, where the closure of the body is to the upside and it's clearly showing that prices came into this area and closed way back up. So this demand zone is now acting as a support. And then if we fast forward a few candles here, we had the pullback again, and we had a bit of a bullish momentum, but this is all a reversal momentum. If you actually look and study the price action, there's a switch in momentum, and now if you did play on this trade, then you would have been risking essentially 150 pips, but like I said earlier, adjusting your lot sizes to make this trade a 1% is more worthy than actually making, using your full risk of a 1% per trade that you normally would do on, let's say, a 15 pip risk. So it's important to adjust your risk, etc. But essentially, this was the only valid opportunity to make essential trade for gold. And it ended off luckily in some degree of a profit to around 87 pips to a max point, but closed off at 45 pips to the upside. So with this strategy, it is more or less about patience, really. There's no real urgency to quickly get into the trade. I mean, if you find that you've missed out a trade here, you've had all this time. You had essentially, if you look at it, you had 20 hours to get into this trade and make a decision and finalize. So, if you did find this candle to the upside and you figured out that this is way above your risk profile and it's way above your 1%, you've got 20 hours to figure out what 1% of your account is as a lot size to then place your order. So when that does happen, life becomes a lot easier, and it's all about patience really, as opposed to over trading. You want to stay away from that. So this is what this style and trading methodology is all about, really. It's about patience, waiting for the perfect outcome and risk probability, and you always have to be present at the market. You can't wake up really too late in the afternoon or too early. So try adopt some sort of routine in your daily routine, etc. But essentially that is all that's all the analysis that we've gone through in this week, and we've gone through all of the positions that you could have potentially taken with our analysis alongside the weekly videos as well as the daily videos. Now, it's very important that you watch our daily videos as well, just to be precautious of where the market is heading. The weekly analysis videos are okay, but it's you get more of a precision of where markets are heading if you are checking the markets daily. These videos are not just for us to showcase what we're thinking. It's for your benefit, in the sense of adding an extra confluence to your own trading plan as well. You can totally take our style of trading and adapt it to your own liking. We use our EMAs here as an extra confluence, as well as the demand zone and support and resistance, and momentum, really. So we have a lot of confluences involved in this method. I know a lot of people would pay a lot of money just to understand and figure out this method. So the daily videos do help you to kind of understand how the method does work in actual working time, essentially, as opposed to just a course where it's all written with no application. So, like I said, we are growing fast in terms of subscribers. So, hopefully you are making some money with this strategy, and hopefully it's all working out for yourself. If you do have any other questions, though, make sure you message me on any other social media platform. I'm happy to help with any of your questions, really. So that will be all. Stay tuned for the weekly analysis videos that we'll post out tomorrow, and we'll kick off the next trading week. So thank you very much for listening, and we'll see you next week.